Welcome to another edition of the Energy Week podcast. Ryan Ray alongside the one and only Dr. Energy herself, Ellen Wald. Ellen, how's it going today?
Everything is fantastic, and lots going on in energy, that's for sure.
Lots going on, and a quick note to the listeners. So today we have on Dr. Dean Foreman from the American Petroleum Institute. Next week I will be out of the country, so no episode on the 18th. But I will be back, and Ellen will be here, and we will have on Gene Epstein, it looks like, on the 25th. So we'll be back for the 25th. And if you're curious, Gene Epstein is, I think he was, I don't think he still is the editor of Barron's Magazine. He's an economics guy. And so we talked to him about some of the trading stuff and commodities we brought up, what was it, last week, Ellen, or 2 weeks ago. So anyways, so that should be good. So anyways, show today, no show next week. We'll be back the 25th, and should be regular schedule until Baby Piper makes her glorious appearance. That might put a slight interruption for a week or so in the recording schedule.
Careful, or we'll ask the listeners to take bets on when she will make her debut.
Yes, well, hopefully it's after March 22nd, because that's when I get back from Africa. So
Okay. All right, everyone, fingers crossed.
Fingers crossed.
Baby Piper, stay where you are.
Before we get in the show today, we have a review. And Ellen, we don't have a lot of reviews for the show. Nate will link to where you can leave us a rating and review in iTunes. Text One Guys Podcast is like 110 or something. So we need our Energy Week listeners to give us some more ratings. And we take 5 stars or more. You just figure out how to get the more. We'll be happy. This is from Speakner, I think is how you say that, Speikner. Good updates, 5 stars. Ryan is awesome as usual. I don't ever hear that, so thank you, Speakner. I've never heard I'm awesome, much less as usual, so that means a lot. Ellen, good info, but acoustics are very high pitched. Now we got a policy on this, Ellen. Anything audio related now goes on Nate. He's the producer of the show. He's responsible for this, so I can't blame Ellen for how her acoustics sound. It's 100% on Nate, and so send all hate mail to him, please. We will be sure to connect you with Nate to get
Well,
that.
I will say that I have been working on pitching my voice a little bit lower because I do hate to listen to myself on audio, but this is not the first person who's told me that I sometimes do pitch my voice kind of high. So I do appreciate that feedback.
And it goes on to say, liked small political contribution from Ryan regarding Trump and his anti-oil zealotry. He had this position before he took office. Trump, not me, he's referring to there. Read his book. He wants oil low, not a grand scheme to raise when economy is booming. One of the best informative podcasts other than the Texas Oil and Gas Podcast. And I know the guys at Texas Oil and Gas Podcast. They're pretty good if I do say so myself. So a couple things there. First off, thank you for the comment. If you leave a rating and review, we will be sure to read it. Also, the website, I don't know how, Nate sent me a thing last week that I think the homepage is built and he's working it out. So we will have a spot for that, a newsletter we send out, stuff like that. So be sure to do that. Thank you for this. I thought about this comment, and I don't remember. One of the things, Ellen, I've learned is people send in questions for Texas Oil and Gas, like, you said this, and it was right or wrong or whatever. I'm like, it's kind of hard to remember exactly what we say. I don't remember exactly. I remember talking about the economic booming thing, and I don't remember if I was tongue-in-cheek saying or not, but I think what I alluded to there was, I wonder if Trump's wanting to keep low prices low, and then when the economy's booming and the prices rise, he can take credit for the booming economy. And so I think that's something, sounds kind of like what I said there. And I have not read Trump's book, mainly, and here's why, Ellen, because I've heard, we had on Feed a While, we've had on Blackman, I talked to Blackman several times, and I kind of think generally with Trump's negotiation tactics, you at least understand where, at least from what these guys say, who kind of follow him pretty closely, how he thinks and how he negotiates. So I haven't read his book, and that's on me, and I'll take that. I'll take the L there. But have you read Trump's book, out of curiosity?
Well, I have not read his book. However, I will say that I have been told and shown photographic evidence that my book and his book are often next to each other on the shelf at Barnes & Noble in the business section. So there you go.
The difference is
they should be read together.
You actually wrote your book. That's the difference.
Yeah. Yeah, I did write my book. I wrote every word of that book.
I don't
Probably
know.
3 times over.
And you indexed it as well.
Oh, God. Don't remind me.
But anyways, thank you for the feedback on the economy. And I will go look up some stuff on his. I'll definitely ask David Blackman as well, his thoughts on that, because he's kind of the Trump go-to guy on that. So thank you for that. And anyways, yeah, leave ratings and reviews. We'll be happy to read them on the air. Okay, Ellen, let's get into it. Let's start off with our friends from Gas Buddy. Gas price rise hits 4 straight weeks. I kind of read that poorly, but the prices are on the rise for 4 straight weeks is essentially what they're saying.
Yeah, I thought this was interesting, and Gas Buddy guy has been tweeting about this all day. Apparently, gasoline prices are going up, 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 up. And also, there's some interesting thing commented that Florida can expect rises coming tomorrow, particularly because of some sort of price cycling issue. I don't know, but I thought it was an important point because you know what happens when gasoline prices go up? The next thing we get is a tweet from the president.
I was going to say global recession because that's what it sounds like.
Oh. Well, I don't think we're quite in the global recession territory. Although, it's an interesting point because there was at one point I was asking people, I said, so at what point do gasoline prices get high enough that Americans start to either conserve or start to get concerned about buying gasoline? And I got a whole bunch of different answers about this. Like there are some answers where they say, well, it's got to get to this point before Americans really start to feel it in their budgets. Or there's a much lower point where there's a psychological impact, even if it's not that significant in the budget. So they'll keep buying, but they'll be very, very upset about it because of the there's a psychological line at which Americans do not want to pay above this line. And then there's the actual line where demand starts to go down. And I don't think we're at either of those levels just yet.
I got a question here for you because you talk about these levels, and I'm wondering if this is so, for instance, let's say you had $2 gasoline for 6 months straight, okay, and then it shoots up to $2.40. People would probably feel that more because it's been so consistent. If the price fluctuates, though, let's say it's $2 and it goes to $2.20, then it goes to $2.40, and it goes down to $2.10, then it goes up to $2.50. I wonder if the fluctuation kind of eliminates some of that psychological mindset because the price is always in wild swing fluxes, and maybe $1 flux or 50-cent flux. So within 6 months of the year, you might go from $2 to $3.50 to $2.25 to $4. And you're kind of up and down. I wonder if the stable low prices actually have more of the psychological impact, where the prices are kind of trending upwards and come back down and trending upwards, coming down. People don't really think about it as much because they kind of get accustomed to, well, I didn't want to pay $4, but you know what, it's $4, and it'll go back down. Whereas if it stays low and it goes up high, they're kind of worried it might not go back down.
I wish they would do some studies about the effect of all of this volatility and the effect that has on consumers and on drivers, because I wonder if it really does change the mindset, or that it may create this mindset of, oh well, I'd rather not pay this much. It kind of sucks, but it's definitely going to go down because that's what happened a couple months ago, or
right.
Back in June I was paying this amount, but went back down. The thing that we're seeing here is that we're seeing a rise in gasoline prices, and we're not necessarily seeing a rise in oil prices. We're seeing a slight rise in oil prices compared to where we were in December, and then oil dropped after that Trump tweet, and it came back about half as much. So, but what we are, of course, seeing is the fact that we're in that period of time of refinery maintenance, and people are trying to use up all that winter blend gasoline, and we're going to switch over to summer blend gasoline, which is more expensive anyway. So, I do think we'll probably see gasoline prices come down as this is a seasonal rise. I mean, it even says here that gasoline prices are likely somewhere in the middle of the traditional seasonal rally that pushes them higher until April or May. So we could see another 15 to 25 cents per gallon up over the next 4 to 6 weeks, and then either it'll stabilize, probably not go back down unless we see a bigger drop in oil prices, which I don't think we're going to see, but that's another story.
Okay, good stuff, Ellen, on Gas Buddy. Now let's turn to, I love this title, this website URL, Wolf Street, wolfstreet.com, the stories behind business, finance, and money. I like that. Time's running out for world's most indebted oil company, and ironically enough, they're not talking about a show producer here, so I thought that was kind of The title was a bit misleading. I was waiting for it to be, a show producer here. It's in the Wall Street Journal, though, so I guess they, different perspective. They're talking about the one and only Pemex. Ellen, we've talked about this, not recently, but the changes of the president, of the presidency last year. Obrador, I think, is the gentleman's name, the president in office now, and how he's going to shift policy and stuff. Pemex struggling is not new news, but it sounds like the news is getting worse, if you will.
Oh yeah, and one of the multiple things that I liked about this piece was that the author gives Mexico's new president, Andres Manuel Lopez Obrador, gives him an acronym, AMLO, AMLO, which I think is way catchier than AOC. So AMLO. So AMLO has pledged to inject $3.9 billion into Pemex to bolster its finances and forestall further credit downgrade. Part of the issue is that it keeps getting its credit downgraded. It's like BB minus from Fitch and also from Moody's. But basically, Pemex is considered too big to fail. So the question is, can they actually do something to successfully save it or prop it up? I'm going to guess that probably our suggestion would be break it up, privatize it. Might be a better option. But they're saying that not only is the company's debt growing, but their production is also decreasing. And then they've got all these other problems where they had these, do you remember, I think it was in January maybe, where they basically shut down all gasoline imports because you had people who were stealing oil from the pipelines. And it says here, even from criminal gangs that Pemex employees were helping, were stealing this oil, and it's very dangerous and causes all sorts of explosions. And also, so this is a company that's in big trouble, but they need to do something.
Yeah, and there was a story just, was it a few weeks ago, a month ago, about an illegal hop tap getting, blowing up and killing, I think killed someone, maybe a couple people, I can't remember the exact particulars of the story. And I told the story on here about, we went down there to pitch a service to help monitor this. And, I think when you talk about the illegal hot taps and stuff, that we have to be just really frank, is that there's one of the reasons that they're allowed to go on is because of corruption. And so, that's just the reality, whether it's a bribe, whether it's a payoff, whether it's someone being held at gunpoint. I don't know exactly. I'm sure each situation is different, but that is definitely the reality there. As far as you mentioned, breaking it up and doing it, it's I'm not pretty clear on my financial stances. I'm not a big fan of bailouts or things like that. So, but it kind of sounds a lot like Venezuela in the sense of, why don't we give, and I don't know Mexican land issues and stuff like that, but why don't we give the minerals back to the landowners? Why don't we allow private industry to come in and to drill and to create jobs and to do this stuff? It seems like those are the situations. And Ellen, for me, the hard part is I'll give you an example. There is a politician who I know a little bit. I've met a few times. He probably wouldn't remember me, but I met him. And he's proposing that they raise the cigarette law from 18 to 21 in the state of Louisiana. And you're like, well, hold on. We're sending kids off to die to war, but you can't buy a cigarette when you're 18. There's not a lot of sense there. Furthermore, this gentleman was in the public school district, for many, many years. And so he knows that drugs and cigarettes and alcohol are all being bought, and used by the high schooler. So changing the law, he knows fundamentally just doesn't work because he's seen it firsthand. So when I look at that, I have to either say that this man is completely incompetent and has no mental faculties, or there's something else going on here. It's really hard to believe that he actually believes that. And that's the same thing with Pemex, is that it's really hard to believe that these government officials, they don't understand these issues and they don't see that there's actually a better way. And that's the hard time. I have a hard time giving them benefit of the doubt when you say that there is better ways to do things, that would help the lowly citizen all the way up to the elite. It's hard for me to give, maybe I'm too hard, but it's hard for me to give them the benefit of the doubt on stuff like this.
Yeah, I mean, one note about Mexico, they were the first country to totally nationalize all subsoil rights. I mean, I think they were it was well before Iran. It was maybe 35, I think. And so it's been a big part of their constitution. And so it was a really big deal when the previous president, I think with Peña Nieto, said that he wanted to introduce even some minor privatizations, but, returning the mineral rights to the people, talking like everything that goes against Mexican nationalism, of course, that might be much healthier than just injecting or throwing money into a company that hasn't proven that it can, be managed effectively, or, not just lose that money to corruption. I mean, they want to build the government wants to build a big refinery in a place called Tabasco,
Mm-hmm.
which is kind of funny. But it's gonna make oil, not Tabasco sauce. And it costs $8 billion, and they need to build another oil refinery. Of course, they're not necessarily producing enough oil to create more gasoline, but basically they have gasoline shortages in Mexico, and they import so much gasoline from the U.S. Now, from a U.S. perspective, we'd rather Mexico keep importing our gasoline, right?
Mm-hmm.
But it's a big problem, and I think it's one of the big problems that I almost wonder if there's a way to kind of wrap up some of these energy issues and maybe promote more cooperation between U.S. companies and the Mexican oil company in terms of it as a way to improve trade relations. I mean, I wonder if that's something positive that could happen in with regards to trade relations.
Right, and what you hit on there, and kind of the middle, what you're saying is that there's corruption, and that's the thing, is that you're gonna give a bunch of money to Pemex, and then we know that, and I'm not naive enough to say that corruption doesn't happen in other spots, but we know that this is a seriously corrupt institute. So hey, we're gonna throw more money so that money can go to fund the cartels and and whatever stuff. To me, that's that logic. I and I'm not the sharpest guy. I'm not even half as smart as you are, and I can figure that out. And so I gotta think that the president of Mexico has somewhat of a better understanding of what's going on there than I do. So that, to me, that's the thing. You start looking at all this like, well, we know there's corruption, so what are you gonna do? You're gonna give more money to the corrupt people. That, it just doesn't make sense to me, Ellen. I don't know. Maybe I'm too much. Too much of a practical guy. But anyways, okay. So as you say, hashtag meanwhile in Venezuela. This is a story that's been going on, and I don't know what it means. I don't know what the larger outcome of Venezuela is, but there's a blackout in Venezuela, and it's caused quite the storm on Twitter and everywhere else. It seems that it's polarized things. I will say, to put it mildly.
Yeah, it's a huge issue. First of all, as someone pointed out on Twitter today, if you don't have electricity, you can't produce oil. So there's that problem. But basically, the article that, and I'm going to include this in the show notes, it really comes from a blog called Caracas Chronicles, which does a really good job explaining what in the world is going on in terms of all of their electricity and why they have this blackout and what's, why, where it comes from. So basically, it's affecting almost the entire country. Only some were not affected because they don't get power from certain major power lines that were affected. Mm-hmm. And part of the problem that for why it happened has to do with the fact that Venezuela gets a lot of its energy, gets most of its electricity, in fact, from hydroelectric power, which, by the way, is the largest source of renewable energy in most places. Most of our renewable energy comes from hydroelectric dams, not from solar or wind. But so there's some problems with these. Basically, there was an alarm that went off that said that these power lines were overheating, and apparently it was triggered by a forest fire, because you've got to keep your vegetation trimmed around these power lines to avoid having a forest fire, and they weren't keeping it trimming. It says they hadn't maintained these corridors in years. It's very hot. It's summertime there, and so they got a forest fire, and then the whole thing overheated and shut down. And that's an example of what happens in a country like Venezuela, where, yes, they have a lot of oil, but you can't just use that oil. First of all, they can't get that oil out of the ground if they have no electricity, but you can't just use that, feed it into your electrical system and your grid if it's not planned for it, if it's not set up. If you don't have, gas power turbines ready, and you don't have oil power plants. And so it's a very bad and difficult situation there. And power outages are only going to make it worse, but they're also, you wonder like, oh, so what's so bad? I mean, here in Florida, we get hurricanes. Sometimes our electricity goes out for, a couple of days, or, it could be out for a week as much some places. A country like Venezuela, where you already got a huge amount of crime flourishes when there's no electricity.
It's interesting. The last Q&A from this article, and we'll link to it in the show notes so the listeners can check it out. It says, how can Venezuela rebuild its power grid? It says, first, invest in manpower, have them make a long-term plan, and provide them with the resources to do so. I'm curious, do you know much about this publication, in particular the people that are kind of going back and forth on the Q&A here?
I don't, but it was shared by someone who has been a really good source of information on Venezuela. So, I know it's not necessarily the most, it's not a major newspaper, but, it says the guy runs it is a mechanical engineer. So it seems like he probably knows what he's talking about in terms of the technical aspects. But
I guess the reason I was asking was he wasn't critical. I figured first he would say like throw out the current government, and so I was just curious. Like that was, and I'm not saying it's a good or bad suggestion. I'm not there on the ground, obviously, but that I was surprised that there was nothing about the current state of the government, or the revolution, or whatever you want to call it, that's going on down there. I was just surprised that he kept it very practical on what he believed need to happen. So that's why I was curious if it was. But I see down at the bottom it's 100%. Reader supported, so it's independent journalism.
Perhaps that's a given. At this point, that may be a given.
Maybe it's a given. Okay, well, me, I like to thump on the government anytime I can, so I never want to let them get away. But yeah,
it says that they it was a blog that was launched back in 2002, and I don't know. That's about it.
Yeah, and I guess the final thing I'll say is on this is that blackouts are bad, and they can be bad. They've happened in the U.S. and caused injury and death and things like that. But one of the things that's a little bit different, I would surmise, is between the U.S. and Venezuela is unless you're in a big high rise or something like that in Chicago or New York, where you can't really go and get a generator to power your building, obviously, because you're just one tenant. If you have a house, you can go get a generator, or your friend might have a generator, or you can go get in your car and cool off or warm up. You can go to the gas station. There's a lot more. The ability to withstand a blackout in the U.S. is a little bit different than it is in other places, because we have so much more wealth that we can kind of get around it. Whereas a place like Venezuela, you might not have anybody that has a generator. You might not have anybody that has if it's 100 degrees outside or 20 degrees below, whatever it is. Someone has a running car with gasoline that you can go sit in, and it kind of sounds like a silly solution. But if it's 100 degrees, you got to cool off, and so. I think, being kind of a first world, we don't really think maybe there's probably a lot of other problems that someone down there could lay out, but probably don't really realize the effect of a blackout on a developing nation, third world nation, is probably a lot more severe than it is somewhere like the United States.
Oh, yeah, without a doubt.
Okay, and again, I guess it's been a few months in a row now, we have on Dr. Dean Foreman, who is the chief economist at the American Petroleum Institute. We will link to their monthly statistical report, which will come out on Thursday. We're recording this on Monday, so that will be Thursday, March the 14th. Dr. Foreman, how are you doing today, sir?
Doing great. Thank you. Great to be here.
Yeah, and guys, it's been probably 4, 5, 6 months in a row we've been doing this, and it's kind of good to kind of get this pattern. So we appreciate that. And let's just kind of start with where we always do, the executive summary. And you have it kind of broken down with the March Madness theme here. You said your top seeds go to U.S. crude oil production, a monthly record eclipsing 12.1 million barrels per day in February, and U.S. total petroleum demand led by solid annual growth in distillates, gasoline, and jet fuel. Those are your top two seeds, so we'll let you kind of take the floor and talk about those.
Excellent, thanks. No, over the last several months, we've been, or really over the latter half of last year, we were celebrating the fact that we got to 10 and 11 million barrels per day. And here we are eclipsing above 12 million barrels per day as of February. So it's quite a milestone for U.S. crude oil production. And again, number one in the world, it just keeps growing, despite some pull-off actually in the last month in drilling activity. So this is a really strong sign for productivity in the industry, as well as, frankly, on the demand side, the uptake for the products. So as we've had questions about the strength of economic indicators over the last couple of months, it looks like, at least from an overall demand perspective, especially on the distillate side, we're seeing some strength.
So that's exactly where I was hoping to go with some of my questions, and what I found most interesting, because I do remember us seeing a little bit of weakness in jet fuel demand, maybe gasoline demand. We're saying maybe these indicators are showing an economic slowing. Do you see? So you write in the report, you say that you saw a global demand responsiveness to lower prices. So we did see a big drop in oil prices in December, and we haven't really entirely recovered from that. Do you see, based on whatever economic data are available at this point, do you see that the kind of demand responsiveness has been perhaps because of lower prices, that maybe had prices been higher, we would have been seeing a greater pullback in terms of demand? So are lower prices helping to fuel this demand and possibly even staving off some kind of economic slowdown?
That's a great question, Ellen. And I think you're right. I think that is part of the shock absorber that's built into the system, where we were seeing some softness as of late last year and coming into early this year. The fall in prices, especially on the global side, and as we get a clearer picture of trade data, has definitely looked like there was more uptake for U.S. Oil and refined products than what we previously saw in the data. Now, on the domestic side, look, there is some softness, and there's some seasonality that goes with that, where you come off all of the traveling in December, and then you get into the first quarter of the year. So you expect some variation there. That looks like it's par for the course, but especially on the year-over-year increase in distillate demand for February, it being on the order of magnitude of 4%, is still really strong, and that suggests that freight trucking and shipping and all is going gangbusters, at least for the U.S. So jet fuel, as well, as we've talked about in past episodes, being a good coincident indicator of economic activity, also remaining really strong for February. So these are solid signs domestically. Now, on the international side, what has really become interesting is the fact that over the last couple of months, especially when we looked at January, we were saying, wow, it really looks like our exports have evaporated, and the net petroleum imports for the United States had backslid a lot from where they'd previously been. And then, with the government furlough did some strange things with the trade data. And without getting too inside baseball on that, the gist is that it looks like maybe the methodology and the way they estimate the actual volumes that changed hands. When you look at the harmonized trade data that come out of census, the first thing you get are dollar values, not volumes. And then on the customs side, U.S. Customs, when you look at how they estimate the volumes, if they were using some lagged prices maybe in that process, they didn't capture the fact that as the prices went down, if they were looking at dollar amounts, it sure looks like a much greater volume. So we use a combination on the trade side of EIA, U.S. Energy Information Administration inputs, as well as these trade data. And the bottom line is the upgrades to our exports and the downgrade to our imports as of November and December retroactively. And we try to focus on the most recent month's data, but some of the story is, as we've cleared up the data backlog from this furlough, we're seeing a much brighter picture on the net exports to the United States for the fourth quarter than what we previously had. So that's a good news story, but it also says that as prices fell, the world took a lot more oil than what we previously thought.
And I wonder if that is almost kind of a vindication, almost of because people have really been wondering with the president why he keeps on insisting on lower and lower oil prices. Yes, consumers like it, but there's a significant component of U.S. GDP now that's coming from the oil industry. So why is the president going around, tweeting we want lower oil prices? But it does seem that perhaps there is some reason, whether it's intentional or not, to that desire for lower oil prices, because perhaps we are seeing it help keep demand steadier than we ordinarily would. One of the other things I wanted to ask you about has to do with news that recently came out that Saudi Arabia is going to be lowering its production. It's already lowered its production in March, and it plans to do so more in April. Could that potentially send global demand spiraling down, even though prices still aren't that high? Or is this just a really good opening for U.S. producers?
Well, time will tell, and we can't predict the prices API, but if we take EIA's current view of prices, even anticipating what they see as OPEC's response at this point, their estimates in the latest short-term energy outlook show $60 a barrel throughout 2019. So they don't see a big responsiveness to market prices by virtue of what Saudi and OPEC writ large end up doing. Now, that said, Saudi also has to do a calculation of the tactical versus the strategic. And the lesson learned maybe out of 2015 was, unless you have the barrels to basically really squeeze people out of business, which in 2015 it turned out not to be the case, right? It becomes basically a market share game of, as Saudi dials back, U.S. production at these higher levels continues to take market share. So in the near term, you might stabilize revenues and get a slightly higher price for your lower production if you're OPEC. But in the longer term, you've got this trade-off where you're enabling U.S. production to take a greater share of the global market. So that game, as it plays out, the U.S. is behaving as competitively as it can. The productivities remain strong. The productions continue to increase. And frankly, the production's continuing to increase even though our drilling has pulled back a little bit as of February. So as that continues, if productivity is rising, and we've talked about the backlog of wells that are drilled but uncompleted, there's so much production that the U.S. can continue to bring this year. So U.S. production taking this share, Saudi may be trying to stabilize things a bit, but I don't think they're going to, well, I'll hold us speculating about what I think they can do, but the gist is right now the U.S. is in a really strong position.
And so, which is interesting considering that the U.S. is also really trying to basically kill the oil exports of Venezuela and Iran. So it's particularly interesting that our production has really managed to keep prices fairly stable. Of course, we're going to have to see what happens come May when if they decide to pressure Iran even more. But so you notice that one of the other interesting things that's been in the news recently has been this headline coming from Rystad Energy, which of course they love to grab attention, saying that U.S. exports could outpace Saudi Arabia's by the end of the year. And of course, if you go and you really read the fine print, you realize, well, they're talking about both crude oil and products, and we're still pretty far away from outpacing Saudi Arabia, and it depends on a whole lot of things. But I was curious as to what your thoughts on this, particularly because there's still a great difference. The U.S. is still importing quite a bit of oil, despite the fact that we're also exporting a lot. And I was curious of what your thoughts were on this attention-grabbing headline.
Well, let's not get lost in the trees, and let's try to focus on the forest as a whole. Whether or not we technically, and it is important that our exports of products and crude oil as the United States got above 8 million barrels per day this last month. That's a nice milestone too. But where Saudi is, if they're trying to maintain a 7 to 8% market share of exports, if they're trying to, and keep in mind when they do that OPEC quota calculation, they are looking at the crude that they produce that then gets put into their refineries that then has some refinery gain. And so there is some refined products that find their way into that, and not everybody appreciates that detail. So that's part of why that would be the rationale for looking at the broader basis for measuring this. But even that notwithstanding, they still have to look at an overall market share picture that's been kind of a hard game to balance as the U.S. has continued to grow. Now, the question we have is, we have these mixed signals that we get on the global economy and maybe the U.S. economy about the strength of oil demand in the economy going forward. And to be honest, on the economic side, we do still see mixed signals. On industrial production, our economic indicator at API has been saying for 3 consecutive months, expect some slowing on U.S. industrial production. That has correctly turned out to be the case. And on the global scale, when we look at reports of economic growth and other things that are coincident coming in, that weakness in China, the weakness in trade, that's continued to be an underlying theme, together with some of these geopolitical and debt concerns that continue to drag on international investment and economic growth. So as that plays out, it's hard to paint an overly bright picture of that, and these expectations that we've had coming in to the year that global economic growth and U.S. economic growth as a backdrop may continue to slow. That ends up being sort of your dominant theme. And then if the relationship that's held pretty strongly the last few years, where on a market exchange rate basis, using actual exchange rates, if you just take world growth and divide by 2, you basically have the amount in million barrels per day or percentage change of what you're looking at global oil demand growth, since it's roughly 100 million barrels per day global market. So with that backdrop, it's still pretty strong demand, even if the economy slows. And what we've seen this last month or two is just validation that as those prices drop and as the world is continuing to grow at still decent rates, if not stellar rates, the oil demand growth is there. So Saudi's got an interesting battle, but unless we get a much steeper downturn, it looks like there's room in the pie for everybody, if you will, to go around.
Yeah, well, enough for everyone to go around. And now my last, well, I guess you touched on the jet fuel issue, which I was wondering, should we be keeping an eye on this metric, on the jet fuel demand metric, as we head into the spring and summer, or is it really more is gasoline really a better indicator for those months?
Well, they show different things. So on the jet fuel side, we're really looking at a coincident indicator of both consumer strength in traveling as well as some air freight. And right now, what we see for the first couple of months is that the seasonal pattern has continued to hold consistent with last year and previous years. And it's a little bit stronger, actually. So it's the strongest demand for February that we've seen since 2005. Now, when we turn to gasoline, that's a much larger volume. So, jet fuel domestically, we're talking 1.6, 1.7 million barrels per day. Gasoline, we're talking 9 million barrels per day, so a much larger chunk of U.S. products and oil demand. And year on year, gasoline demand, it's not killing it, but it's within the 5-year range, and it's up about 1% year over year. That's solid growth. It's not stellar. It's not what we might have hoped to see last year, but it's still in that overall picture where when you take, as I mentioned, on the order of magnitude of 4% annual growth now on diesel fuel or distillates, couple that with reasonable growth on gasoline and solid demand growth on jet fuel, overall demand for the U.S. is in a pretty good position.
A couple questions I have here about, first off, jet fuel demand. I'm curious, there was a crash in Ethiopia yesterday, very tragic. Everyone on board died. And there was another crash about a month ago before that, I believe, both 737s. When you talk about jet fuel demand and stuff like that, do you see that, because crashes are so rare, does it actually have any kind of impact on travel, which would impact demand, or is it such an insignificant thing that it really doesn't affect when we're looking for jet fuel demand?
Well, that one crash of the Ethiopian Air, which is quite a tragedy is if you saw a number of airlines grounding significant portions of their fleet, then you might see an impact that's happening. If some of Southwest Airlines concerns where they are grounding a lot of their fleet and canceling many flights for a while, that kind of thing could be perceptible, though it's not obvious in the data that we see for the U.S. overall. At this point, I don't see anything that's grounding or a cog in the system for global air demand. And if we look at the International Air Travel Association and their data, the year-over-year growth that we're seeing both in revenue passenger kilometers in the U.S., internationally, both on the consumer air travel side as well as air freight, it's remained solid. It's slower than it was, say the latter half of last year, but it's still solid.
Right. And the report I saw over the weekend, or maybe this morning, said that people were not canceling their flights. They were just changing it from that particular model of plane, just trying to find a different route. So I didn't think it would have a huge impact, but I was curious because, rightfully so, plane crashes do get a lot of headlines and things like that. One thing that Ellen and I were discussing before you came on, I'm curious if you have an opinion on this. We were talking about an article on rising gasoline prices, and I was curious if there's any data to back up if the prices are volatile, gasoline prices are volatile, they're going up, they're coming down, going up, coming down. Do consumers feel more comfortable with that? Whereas if prices are stable for a very long period of time and then they start to they start to rise, which would be obviously a lot more noticeable to consumer, because if it was $2 for a long period of time, it shoots up to $2.20, $2.30. You're kind of like, oh, whoa. Whereas if it's fluctuating, maybe $1, $1.50 range, 75-cent range, consumers might get used to that. Do you guys track consumer confidence on that kind of a scale, or have any data to understand how consumers think about more volatile gasoline prices compared to maybe a slow, steady rise in gasoline prices?
Well, it's a fair question, Ryan. We're actually in the process of updating a lot of our gasoline price information out on the web as we speak. We looked at it hard right as we entered driving season last year, and it's time to update it. And the thing that matters the most, and what we learned remember after the financial crisis, we went through a dip, and then we came back to a period of several years where we had oil at or above $100 per barrel. And for a while, people were getting accustomed to much higher gasoline prices, diesel fuel prices, what have you. And the economy worked. It didn't kill it, but it certainly was frictional in terms of dragging on it. And if you start to look at consumer behavior across different income segments, it certainly presses on lower income segments in a disproportionate way, even though they may have fewer vehicles or drive less than other income segments. So there is a real distributional impact and a somewhat regressive impact when we start talking about how higher gasoline prices in particular flow into consumer behavior and the economy overall. And right now, I think based on those lessons learned, it's sort of the proverbial boiling frog syndrome, where when you slowly get into a situation, you do become accustomed to it and may not realize. And when we were accustomed to higher prices, and then suddenly things fell, and here we are sitting, in the $2.60, $2.70 kind of range as a nationwide average for regular gasoline. In that range, people have become relatively accustomed to it over the last year or two. And if, as we saw around the summer driving season, you saw it climb up toward $3 per gallon, suddenly that was setting off alarm bells for many consumers, even though at the time of this $100 oil, people were more concerned about a $4 threshold. So those signal points of nice round numbers, it's really the change. And when you do see more volatility, that tends to disrupt people's weekly and monthly budgets. It makes it harder to move things around in your budget, to anticipate what your expenses might be. So I actually think, as opposed to getting used to volatility, it is volatility that's hard to adapt to. And it's really the overall price level and affordability that matters first and foremost to consumers.
Okay, interesting. Final thing is, in your report here, you talk about unemployment, which is down, I believe, from 4.0 to 3.8 from January, February 5. I think, okay, yeah, okay. With that being said, we talked about the Fed either late last year or early this year, I can't remember. The Fed has proposed 2 rate hikes potentially this year. They're currently saying right now, hey, we're not going to raise the rates anytime soon. But you and Ellen were talking about, how much pie is there available. We saw in December, I believe it was, when the Fed raised interest rates or talked about it. I can't remember exactly what they did then. The stock market took a big hit. Everyone was panicking, worrying. If the Fed does raise rates, next 2 to 3 months, how can we expect the industry potentially to react to that kind of news?
I mean, as the natural gas and oil industry, the cost of capital is the thing that really matters. And to the extent that your access to capital is drying up in some form or becoming more expensive, on the margin, that has to have some frictional costs in terms of development. So you look at it relative to the prices to say, how strong are things and what production decision makes sense economically, given the cost of everything in the business. So, but it's a holistic picture. It's not just the one thing. From a consumer standpoint, so long as the Fed is signaling that it's largely ready to pause, the financial markets will respond in a relatively favorable way, understanding that the Fed may need to, as a policy instrument, reload the gun, so to speak. So if they don't have some rate increases baked in to kind of normalize things and make sure it's policy neutral, they won't be able to withstand the next downturn and be able to lower rates to stabilize when and if things take a much deeper downturn than what appears now. If you look at the Congressional Budget Office's outlook to 2021 and 2022, it's interesting that here we are sitting with growth this last year. If we're expecting something on the order of magnitude of 2.5% this year, maybe a little less, and that's slowing in 2020 to under 2% growth. By 2021 and 2022, by the official projections for budget purposes, they're down closer to 1.5% growth. And there's just no way to get from here to there without having some quarters that feel, even if they aren't technically a recession, they'll feel weaker. So absence of stimulus, absence of ability to reload that policy instrument, the Fed really has an imperative to try to do so, to try to manage that transition. So that's the game that has to be played and try to box in the different pieces. It's hard to anticipate the timing, but they're trying to do things in a pretty transparent way where they're signaling what they're doing and the rationale they're doing it. So let's hope that we get more measured responses than what we saw, really at end of December, early January in terms of fluctuations through financial markets.
Okay. Volume 33, number 2, will be published on March 14th of this year. And it will cover the things that we touched on and much, much more. We will link to where you can find that in the show notes, which of course is at api.org. At the top right of the website is Chief Economist link. You can go find all of Dr. Foreman's stuff. There's chock full of information. Ellen, I know you were sending me some stuff before. You were excited. We always love getting to do this. Dr. Foreman, thank you for your time. It's always a pleasure, and I always learn a lot by doing this.
Ryan, Ellen, no, thank you both. I really enjoyed talking with you. Thank you.
Thank you. Can't wait for next month.
All right, Ellen, that was Dr. Foreman once again, and good stuff as always. Good stuff as always. Interesting stuff. His comments on the Fed, and I'm curious your thoughts on this. The way the market reacted last year, and he's saying, I get what he's saying. If it's a little bit more measured, a little bit more thought out, or maybe better response. But I don't know. I have some doubt about that. This is the way the market react, and interest rates have been low for so long. You kind of wonder, especially in the industry we're in, we're talking about these companies struggle to make money. Will Wall Street really put the screws to them per se if the interest rates start to go up? Will the spotlight be bigger on can the shale producers actually make it?
Yeah, I really think that the issue with the Fed is one of the issues that a lot of these forecasts are not taking into account, because if they raise interest rates any faster, I do think it will start to affect the shale companies, and that could have some really bad consequences for the economy that I wonder if these financial wonks are really considering. And I do think I think it should be a serious consideration, but I'm not convinced that it is.
Well, we will see what happens. We had a listener send in something on the Textile Guest podcast this morning, correcting me where I was wrong. So it will not be the first or last time if I'm wrong on this one. And but I love getting Dr. Foreman on. Thanks again to the folks and Sabrina at the API who set this up for us every month. And they work hard to get us a report because it comes out. What we see is I don't want to say it's a rough draft, Ellen, but it's definitely not the final version. They have some I's to dot and T's to cross. So appreciate their time. Ellen, where will you be this week?
This week, I am on the Hill, not literally.
I was about to say literally.
Just
Okay.
figuratively. I have a piece on the publication The Hill, which can be found at thehill.com. It's about the NOPEC bill that is kind of slowly but surely making its way through the houses of Congress. It's called American Energy Could Be Collateral Damage in Attempt to Punish OPEC. So check that out. I'll put that in the show notes. And I was on Bloomberg Radio on Friday, which has been put up online. So I'll put that in the show notes as well. I kind of talk about how I see that oil's kind of in what I call a holding pattern as we wait to see what happens with Venezuela and Iran.
Okay, good stuff. And Texas Oil and Gas Podcast was recorded this morning. It will be out. I also have a new show, Ellen, I forgot to mention. It's the Oil and Gas Contractors Connect. And what we're trying to do with this episode is just to get people to find out who people are in the industry, what they do. And so curious if that's something that listeners, when you know from the Texas Oil and Gas Podcast, it seems like an idea that folks are interested in. So if you're curious about different folks in the industry, I think we release those early in the week. Anyway, so Oil and Gas Contractors Connect. But Texas Oil and Gas Podcast, we talked about, and I was telling you this offline, Ellen, that some of the stuff we talked about on this show we had drilling info on, about the demand for light sweet crude globally. They talked about Venezuela and how light sweet crude was going down there, how it was going to China, demand forecast. It was really good stuff. So if you're interested in stuff like that, at least the second half of Texas Oil and Gas Podcast will be of interest to you. We will be off next week. I will be down in South Africa, and we'll return the following week with Gene Epstein. Ellen, anything else before we get out of here today?
Just want to wish you a very safe trip and trip back, and also go Celtics.
Go Celtics, and the Lakers suck. Until next week.
Bye.